Hi guys, and welcome to the BluFX webinar, and thanks for those guys who are tuning in. So if you do not know that much about BluFX, they're a proprietary trading solution supporting all traders at all levels. And to find out a little bit more about their service, just please head over to www.blufx.co.uk. And also, just to give you a little bit of an introduction about myself, my name is Rajan Dhall. I own a company called FX Daily. We have two websites, so an institutional website which is fxdaily.co.uk, and we also run a retail website called fxdailyterminal.com, which is more of a news-based website and kind of helps out retail traders and things like that along the way. So just without further ado, I'll jump into what my webinar is about today. So I'm going to be talking to you guys about auction theory, volume profile, and a little bit of market profile. So that's my background. So I am an MSTA with the Society of Technical Analysts. I've been involved in trading for the past 10 years, working at institutional companies, working at news agencies, and also been trading myself for that whole period of time. So just collected like a wealth of knowledge in lots of different subjects, both fundamentals and technicals along the way. But basically I use them both, but auction market theory is kind of my go-to method of trading, and it's what I'd like to talk to you guys about today. So just going into it, so just having a look at this chart first of all, and I just want to take away all the indicators from here and all of the support and resistance lines. So I'm just going to use my tool here to hide all the drawing tools. So I use TradingView charts because I also write for TradingView and I work for TradingView. So just a full disclaimer there. That's the reason why I use their charts. So if you do have any questions about them, just please let me know. But I'm not here to sell anything or any services. It is purely an educational webinar. So you can see out here we just got a purely naked price chart here. I use candlesticks. I do also use point and figure, but I'm not talking about that today. I'm just going to talk to you about this stuff over here on the left hand side of the chart, which is the volume profile indicator. So first of all, there is no volume really that you can use in FX. So in futures in Chicago, they do use volume there, but that only accounts to 30% of the total foreign exchange volume. So you can use that as a kind of indicator, but it's not a major indicator of volume in the FX market. Now what this indicator is made up of here is TradingView use interactive data, who are recently bought by ICE, the exchange. So they amalgamate liquidity data from about 6 different liquidity providers, so the largest liquidity providers in the world, and they give you tick volume data. So the difference between tick volume data and general volume data is that general volume is traded. So let's say, for example, we're talking about gold. If you've got real volume or real, I suppose, trade data from gold, you could see how many gold contracts are bought and sold at any one particular time. But in FX, because it's an OTC market, you've got banks trading, you've got individuals transacting money, and there's lots of different ways you can do transactions. So none of this can all be recorded in one centralized location. So that's why we don't get volume. So what this volume is, the one that I'm using today, is transactional volume from these liquidity providers. So how many transactions, so tick by ticks, have been done at what prices. So that's what I have on this chart. So just to explain a little bit about the indicator, so when you see these high period shapes here on the bell curve, so what this means is basically there's been a lot of transactions taken place at this price. So it doesn't mean there's a lot of volume going through it at this price, it's just how many tick by tick transactions have been taken place at that price. So that's a high volume node. That's something that you want to be made aware of. And then you've got these periods here where there's like low volume, and this is called a low volume node, obviously, and they do have different names. So some people call this a VPOC area, but I'm going to keep this very simple language for you guys. And this is an area where there's not a lot of volume taking place. So not a lot of transactions have been taking place, not a lot of ticks have been taking place at this price level. So this is basically how I want to work this, but I want to simplify this slightly. So for those of you who trade, I don't know if any of you have been to a car auction or a house auction or whatever. The way that I want you to think about this in your mind is that when they come in and they put the house onto the auction at the beginning, they start off at a very low price. Then one brave soul puts his hands up and he says, oh yeah, I'll make a bid at that price. And then all of a sudden more people come rushing in and more people come rushing in, and you see there's an area in which you find the price where there's a lot of people bidding. and that's what I like to call the high volume node, or the value area. Where most people bid and there's most interest generated is what I call the value area. Okay, then it starts to thin out and thin out and thin out, and the person with the most money or bids the highest price wins, and that's a low volume node because there's not a lot of interest at that area. There's only one person that wins the auction. So in an example that I can give you, so let's say a share only has two variables. Either you want to buy the share or you want to sell the share. Foreign exchange is a very different animal. You've got buyers of Aussie dollars in this chart, you've got sellers in Aussie dollars in this chart, you've got buyers of US dollars in this chart, and you have sellers of US dollars in this chart. So you've got four variables to contend with. It's a lot easier to use volume theories in gold, in silver, in copper, in BP shares, Glaxo shares, whatever companies that you're looking at. So just bear that in mind when you're looking at volume-based theories in the FX markets. And what I'm about to tell you now is a prime example of that. So let's go and look at euro dollar. So you've got euro dollar here. You can see it's shifted quite up. It's quite high in terms of value on this chart, on the daily chart here. But obviously, are things going that well in Europe, or are things going equally as badly over in the US? So that's the way I want you to think. So this on a consensus term. So we've got the euro versus the US dollar, but obviously that's how you trade it. But what I want you to think about now is euro value versus US dollar value. So if we're looking at this chart, is the euro only high because the US dollar is trading really badly, or is it because the euro is very strong? So it's quite an interesting question from my perspective and from a value trader's perspective, because in theory the euro could stand still and do nothing, but the US dollar can get weaker and weaker and weaker, and that could shift the euro value higher and higher versus the dollar, but the euro has done absolutely nothing in that sense. So bear that in mind when you're looking at value. So let's talk about some currency pairs now. So and the shift in value. So I'm going to start off with an easy one. So we're going to go with the dollar index. And I'm going to bring it over to a weekly chart and talk to you about how I look at these theories over a longer term. So over here you've got a massive material shift from 2014 over mid 2015 or so, and this was a time in which that everybody realised that monetary policy is going to have to change. We can't ease forever. The balance sheet is going to have to be reduced, and that obviously meant that the dollar would gain in material value. The shift of value would have to go higher because of, one, the amount of dollars in circulation, and also they're not going to keep continuously printing, and the market had to realise that at some stage, and that's where we are now. But the key that I'm going to zoom in on is the 2016 to now period. So I'm just going to finish moving my chart over, and you can see that this rally going up, and that was called a reflation trade when Trump won the election. Now, yes, everybody thought that Trump was going to, make America great again and bring all of the dollars back and repatriate all the dollars back, hence why we saw a rally up towards the 104 level. We just traded just shy of the 104 level, but that was the key to this trade. But then all of a sudden, we made a lower high, and then we made a lower low, and a lower high, and a lower low, and a lower high, and a lower low, and we hit a downtrend. And the beginning of this was a catalyst of errors, and this is what we want to talk about, the shift in the paradigm of value. So first and foremost, Trump got into power and people realized that he couldn't deliver his promises the way he thought he could, and this was starting with Obamacare, and that was the first time we shifted lower and we made a lower high. Now I'm going to put in a line in here so you know exactly where we are while I drop to a lower time frame. So hitting on the daily, I'm just going to go back to that line, which is here. Perfect. And then all of a sudden, when they realized he couldn't deliver his promises, we got a low of a consolidation period, and lo and behold, it was at a previous resistance level, which has now turned out to be support. So we got roughly a test here, 1, 2, 3 tests of support before it was broken, and this was then, when we realized that yes, that Obamacare thing was never going to happen, and we broke lower and we tested it back up again, and subsequently we broke down again. So that was the catalyst of what went on. Now where we are today, because I hate talking about trades and charts in hindsight, because I know a lot of phonies who do that. So basically where we are today is what I want to talk to you about. Do I think the dollar is at value here? No. I think personally, and FX Daily, so our strategist Sean, we think the dollar is materially undervalued, not on a political basis, on an economical basis. So let's look at what's going on over in the US. So we've got interest rates being hiked, we've got the balance sheet being reduced, we've got the data, the GDP data, the inflation data. All of this is improving and coming in line with expectations, but the bad variable is just the politics, the Trump trade. So obviously these trade wars are not going to do any good for the US dollar, especially as we have had Japan sell a lot of their treasury holdings and repatriate a lot of money back into yen, which is hence why we've seen a big fall in the dollar, and I'll show you a dollar yen chart after this. But not only that, China have also threatened to stop buying treasuries as well, so that also they're a big buyer of foreign debt, so that's also a big problem. So looking at dollar yen, you can see the charts, they're not the same, but they are quite identical. And yen, yes, it's a safe haven, so we'll see a lot of money go in there in times of trouble, but Japanese are traditionally savers, so that is also another big part of this. But this whole trade from 2018 down, maybe December 2017 down, is the repatriation of funds from what has been seen as a little bit of a volatile area over in the US, and that is what I mean by a material shift in value. So we had a strong inflection point and a strong value area. In this chart you can see where the high volume node is here, which was around the 111 to 112 mark, and all of a sudden it capitulated and collapsed. Then when it broke down, it tested that value area low, which is the low of the consolidation range at 107.86, and then it continued lower. So do we think that it's gone too far too quickly? Yes, there is an argument for that, but looking forward, like any kind of trading, you have to trade the odds, and if you roll a dice, is Trump going to get any better? Probably not. So we do have some more downside risks there, but if everything stays roughly where it is now, we can see a rally back into testing the consolidation low again, around this stage between the 107s and the 108s. It's a possibility if nothing gets worse, but obviously we can't predict the future to test that. So let's move on to another example of this, and this is probably my favorite example. Is cable. So with everything that's hanging over the UK's head at the moment, is cable worth where we are today, currently trading at 140, 150? Probably not in our opinion. So it took them how long to pass this transition deal? Now they have 1 year to negotiate trade deals with every single European state, so member state, and if they can do that, yes, I'll happily see the trade go to 160. But if they can't, we're looking down at the 130s, 132s for value here. And the way we determine this is like going over to the weekly chart for a second. So this is the Brexit candle. Again, I'm just going to get rid of all my drawing tools here, just so I can annotate this correctly. So this is the day before the Brexit. I'm going to zoom in as well, the referendum rather. And this is this candle, so this hammer candle here. So we've tested that level and we've rejected that level. Fine. So we can see that maybe the market doesn't feel like, yes, it's not warranted being there. We're now currently near that level again. So are we in a better situation than we were the day before Brexit? No, I don't believe so. I think we're in a more precarious situation. Yes, Brexit happened and we pushed all the way down towards 120. We dropped below 120 on the flash crash, and we subsequently made higher highs, higher lows, higher highs, higher lows, when people have realized things aren't quite what they seem. But where is the value area in this trade? And for me as a technical analyst, I'm looking here. So 133.20 is my value area of here, and this was just us realizing what was happening with Brexit. Even we're not sure how all these trade deals are going to be done yet, and we've pushed all the way back up to a ludicrous level of 141.50 with all this hanging over our head. So I'm not giving you any trading advice to say sell here. I'm saying from a value perspective, it's very hard to justify sterling being at the level it was the day before Brexit. So another example, let's go and have a look at Aussie dollar. So Aussie dollar, as you guys might be aware or might not be aware, is a commodities currency. So it tracks gold, silver, copper, iron ore. So they're the main commodities that attract. There might be a few other little ones, but mainly if those commodities are moving south, Aussie dollar is moving south with it. If they're moving north, then Aussie dollar is moving north with it. So let's have a look at what's going on. So in terms of value, yes, we were up at 181. Excuse me, and we've seen a sell-off. So again, lower highs, lower lows, lower highs, lower lows, and this was where the trade wars really kicked off, and we saw a sell-off from here. And this was a pretty obvious trade. If there are going to be global trade wars, commodities are going to suffer, Aussie dollar will suffer. And then yesterday we have this candle, this positive candle, and this was when obviously the White House said that they're going to talk to China and try and discuss. So there was a bit of an easing bias there in terms of the trade wars, and then we got a slight move up. Subsequently, gold has dropped off quite heavily today. I'm just going to bring you up a chart quickly and move back. So you've seen here gold's fallen off, and we've seen Aussie dollar fall off with it. Copper slightly recovered, but it's not been amazingly bullish. Let's just show you that. You can see we've seen a bounce back of the lows, but subsequently we've gone back down, and also WTI is just hovering today. Hence why we're seeing a bit of consolidation in Aussie dollar. So I believe in this one we're going to move a little bit sideways, but any break onto the upside of these levels here, so 77.85 upwards, then it would be a good idea to take a trade to the value area of around here, maybe the top of this this low volume node here. Could be a decent trade with a stop just underneath the wave low. And then on the other end, if obviously we don't know how predictable these trade wars are going to be, if anything does get worse and we do break lower, we could take a trade back to the value area of this lower point here, so maybe 75.50 or 75.70, and with a stop just above the previous wave high here at 77.90, something like that. And that's where we're seeing Aussie dollar move from here. So it's very obviously heavily commodities orientated, but I don't see the demand in copper dropping off, and iron ore, I do see that continuing. I just think this is a small blip in what is a bigger picture. So hopefully something of what I've taught you today or spoken to you about today in terms of value and auction theory and volume profile can help. Just remember some of the points here. So the areas in which there are very high volume and a lot of transactions are taking place is a high volume node. Low volume nodes means that there's not a lot of interest at that area, and they can be used as support and resistance levels like that. But also, if you don't have this charting package and you don't have this system, there is a very easy way of doing this. So if you look at all the price data and you collapse the chart over to the left hand side, and you shifted all of this price data over to the left, the areas in which there's most amount of price activity will largely fall in line with the higher volume nodes, and where there's not a lot of price activity is where there'll be a low volume node. So it's not rocket science. That's how you can determine the support and resistance level based on auction market theory, and it does work. I mean, I've done this for years without having these charts here, and I used to make my own charts on an Excel spreadsheet in terms of the volume and the price data. It's not a difficult thing to do. But if you do have any more questions, you can always email me. So I'd just like to say thanks for tuning in. If you do have any questions about this webinar, please send them over to info@bluefx.co.uk and we'll get them answered for you. Thank you very much.